Hello, I'm John Crowther. Welcome to This Week in the Markets. Last Friday, Moody's downgraded U.S. government debt from AAA to AA. It is the last crediting agency to do so. The first was S&P back in 2011. In the beginning of the week, both the stock and bond markets took this in stride. But eventually, the bond market started to look towards the budget battle that's going on in Congress for the Trump administration, looking for the Trump administration's strategy initiatives going forward. These would also increase the budget deficit. At the same time, Moody's just downgraded our debt. Eventually, the 30-year later in the week went to over 5% for U.S. government debt, and the 10-year Treasury was approaching 4.7. S&P 500, the NASDAQ, and the Dow Jones for stock market indexes stayed in a range, pulling back to its gap after the China negotiations from 2 weeks ago. One thing I'm looking at right now are global sovereign debt. For example, in Japan, its 40-year government bond, the JGB, hit multi-decade highs. It seems that slower growth, expected inflation, and demographics working against the various industrialized countries is allowing for budgets to balloon in terms of its deficit, and the bond market now is asking for more interest rates in order to lend for that debt. All remains to be seen how this works out. Will there be stronger growth? Will there be higher taxes? Or something in between? All remains to be seen. I'm John Crowther. This was This Week in the Markets. Have a great week.